Welcome to QAV, Tony, episode 839. How you doing?
Good. Good, thank you. Back from Wagga.
What were you doing in Wagga? Golf?
Catching up with Ruddy, playing golf, played 3 days of golf.
Lovely.
Stayed up late, blew the diet, had fun.
Blew the diet? Didn't know you had a diet.
Well, now I don't drink. It's the only sort of vice I can do when I'm away from home is to have a bit of chocolate, stay up late. Yeah.
Right.
It was good fun.
I can think of other things you could do, but we'll leave that for
Yeah, so could I, but anyway, we didn't. Not with Ruddy anyway.
Well, I was going to say you hit the town with Ruddy. I think it's...
right.
Yeah.
Have you been to Wagga Wagga? It's like you can go to the Air Force pub, the Army pub, or the student pub.
Right.
And if you wait long enough, they all get together in the main street and fight at about midnight.
Well, there you go. Well, speaking of fighting, those people that are on our YouTube or TikTok will notice my 2 black eyes and bruising around my nose. I got my nose broken on Saturday in Kung Fu. By a 16-year-old lad who, during sparring, sort of broke one of the cardinal rules and did a spinning elbow that hit me in the nose. He's pulled the spinning elbow on me a lot of times in sparring, and I normally catch it. I'm waiting for it. I wasn't waiting for it this time. It took me by surprise, slammed into the bridge of my nose and broke my nose. So that was fun.
Did he
so
say,
the swelling...
dirty commie, when he did it?
Dirty commie?
Yeah.
No. He was horrified and tried to leave. He packed his bag after checking on me and whatever.
Oh.
I said, I'm fine. I said, get out there. Let's all go. It was an accident. Don't worry about it. And he tried to pack his bag and leave, and I had to stop him and say, dude, it's okay. Like, accidents happen. You know, you're going to hurt people. You're going to get hurt.
Okay.
Yeah, a bit like that. I did have an ice pack on my nose at the time. So it's the first time I think I've had my nose broken, so that was fun.
Oh, wow.
Anyway, so breaking news, Tony. Before we get into the rest of our notes, breaking nose. Oh, there's a good episode. Hey, that's a good title. Good job. Breaking nose.
Well, when I first saw it, I thought Fox must have grown a bit taller.
Well, I went to see the GP yesterday to get an X-ray done on it, and first thing he said was, domestic violence? And I said, not this time, no. But I was saying to Chrissy, like, he'll probably believe me, but if Chrissy had gone in there with the broken nose and the 2 black eyes, would have been a completely different story. I would have had to get a note from the Sifus, I think, to back up my story. Breaking news, just before we started going on air, on internet, on Wi-Fi, Southern Cross Media and Seven West Media announced merger. Kerry Stokes to step down. Both are on our buy list this week. As far as I can tell, the share price hasn't really changed a great deal since the announcement came out. But, these are 2 of those companies that whenever I see them on the buy list, I kind of go, ugh, not these guys again.
Kind of like Myer?
Yeah, kind of like Myer, kind of like, well... Atlas Pearls, and who were the other ones in the old days?
You don't like Atlas Pearls? Apollo Tourism and Leisure.
Apollo, yeah. We got burnt by Atlas Pearls because of the pearl trading business. Let's see, SXL. It's bumped up a bit. No, not today, it hasn't. Actually, it's gone down today. So there you go. Hold on, that's not AX. No, even AX has gone down a bit today. So that's not good. Market's not reacting to the news very well. And
it's possible that people are crunching the numbers to work out which side to buy. It's usually you buy one and sell the other in a merger.
Okay, so who's the other one? What's...
Didn't you say it was SWM and SXL?
SWM. Yeah, that's right. SWM. What's gone on? No, their share price is down too, from 16 cents down to 15 cents.
No one likes the merger.
Yeah, because I was like, oh, well, one of them will have jumped up as a result of that. No, apparently not. So
you promised us exciting news.
Well, broken nose, I said, but not.
Broken nose.
Didn't say it was big. Tell you what is big, though, Tony, is the portfolio updates. I know I said this the last time we spoke, which was a couple of weeks ago, but portfolio is going nuts. Look at the Light Group. The Light Group all time, so this is like February 22 to today, is up 20% per annum versus 11% over the same time frame for the SPDR 200, so almost double. But if I look at the current calendar year, the group is up 31.5% versus 10.8 for the benchmark. Just out of nowhere. Going gangbusters.
That's got to be reporting. It's got to be reporting season, or the result of reporting season, I would think.
Yeah, it certainly kicked up after that. Even the first of the portfolios, the one that's really struggled, 221, has jumped massively since reporting season. If I go back to all time, it's still trying to catch up to the index. It's at 8.5 versus 9.8 for the index. But this is coming from a point where in mid-2023 it was down 10% when the index was up 5. So it's made a lot of headway since reporting season. But the others, 222 is up 18.5 versus 9 since inception. 223 is up 20.6 versus 12 since inception. And the fourth one is up 24% versus 11 since inception. So, yeah, like it's, in the dark days, you know, I tell myself, all we need is a good period and we, back on top. But, you have to believe, trust in the logic, trust in the history, what I've seen happen before. And then it happens and you're like, oh, yeah, this thing does work. Dummy portfolio. Well, no, I know that. But, it's still, you're like, it's one thing.
Oh, I know. You were saying to me, can you reconcile the transactions? Can you look at the Light portfolio number one and why isn't it working as well? And I'm just like, wait.
No, you said to me, you want me to check that? Make sure you're doing the right thing? The dummy portfolio... The dummy portfolio since inception is up close to 18% per annum versus 8.5 for the index. It's had a little bit of a bump too, but it's doesn't show as much as the other ones. But it's doing better than double since inception. So all good on those fronts, Tony.
Very good, isn't it?
The Stockopedia one too. Let me bring that up while I'm at it. We'll do a US show after this, but for what it's worth, for people that are paying attention, our US portfolio all time is currently up 65% versus 50 for the S&P 500. So it's come back quite a bit from its heydays. It's even been falling lately. Over the last 1 year, it's only up 3% versus 16 for the S&P 500 because it came back, as I say over and over again. Pre-Trump, it was going gangbusters, Trump, tariffs, all that kind of stuff, and it took the wind out of its sails. So the last one...
It's a Democrat portfolio, is it?
It's a sanity portfolio. Yeah. Before the complete insanity, it was
some white portfolio. Yeah.
But all in all, it's still doing quite well. Like it's up 65% in 2 years. So, nothing to be sneezed at. But at one point it was doing like 3 times the index. At the end of last calendar year, it was up 95% versus 35% for the S&P 500. And then Trump got elected, and everything everything went backwards. But still, it's doing okay. All right, so that's the portfolios. I've got some bad news for you, though, Tony. The golden age of value investing is over.
Really?
Never heard
It's
that
news
before.
to me. Yeah.
Never heard that before. I saw this in Bloomberg a week or so ago by Guy Spier, guest columnist. Bloomberg. He's the author of The Education of a Value Investor and has managed Aquamarine Zurich's privately offered investment funds since 1997. You familiar with The Education of a Value Investor, Tony? You ever read that?
I have, yeah.
Okay.
I'm just laughing at, was it Albert Speer running the Zurich portfolio? It's like,
Wrong Speer. Spelt differently.
oh, is it? Okay. Maybe.
Not Hitler's architect.
Yeah, no.
One of my favourite Nazis, though, I got to say. Speer.
Because he defected.
Well, no, but because he survived Nuremberg, but his architecture was amazing. Like, he was a really great architect. Anywho, and a reluctant Nazi, I think, but, Anywho, this is what Guy Spier has to say. For 30 years, my advantage as an investor was painstaking research. AI just made it worthless. He talks about his history, Berkshire Hathaway, blah, 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 blah. In those days, potential investors in my fund used to ask, what's your edge? Perhaps it was a shorthand for, do you have a source of inside information? Or more politely, what's your variant insight? If I had any at all, it was based on this sort of scuttlebutt. But that world is now gone. Over the last decade, many of those advantages have been eroded. Pounding the pavement, smiling and dialing were no longer necessary because those hard-earned insights were being emailed, tweeted, live-streamed, YouTube, podcasted and more. Yes, you still had to pick your sources, but there was so much more that was simply available at the tips of any analyst's fingers. And now comes AI. The way investment research changed in the internet age was glacially slow when compared to the earthquake that is LLMs. Before ChatGPT, you still had to have the patience to assemble and read through the mosaic of sources. Now you can just ask ChatGPT or Gemini to do all the trawling. An LLM can give an instant summary of all that has been said in the public domain about a company, and it can be instantly analysed to provide the current state of wisdom on the topic. Funnily, though, I'm in the value investing subreddit, and I constantly see people, mostly Americans, saying, I can't find anything to buy. There's nothing to buy. There's no value. Everything's gone. And I'm thinking, I just did my US checklist and there was 200 companies on the US checklist. And, and I've gone over, I don't think I've done it on this show for a while, but if I do it on the US show, if I look at the pulled porks I've done on QAV America in the last 5 months, Chemex is up 68% since then. Zep is up 1,500%. Sasol is up 43%. Grey Media is up 40%. IHS is up 37%. Oryx is up 27%. Canadian Imperial Bank is up 23% since I did it in May. And then the rest are all up single digits, a little bit lower, double. Precision Drilling is up 18%. Plenty of value we were finding in those stocks, and there's hundreds. So I don't know that the technology. I remember, when Warren was asked about AI, I think a year or two ago at the AGM, he said people will still be greedy and stupid. Doesn't matter what the technology platform is. He's seen technology come over the last 60 years, and people still aren't being long-term value investors. So I don't know. I'm not sure that it's as over as Guy Spier thinks.
I don't think it's over at all. I mean, maybe it'll end one day. There's a couple of really big shifts in tectonic plates in investing, and the rise of passive or index investing and ETFs is huge. And Spears is right to talk about LLMs and being able to have even more information at your fingertips. And he talks about not needing analysts anymore to work for him. So yeah, all those things are huge. But however, there are still always anomalies, and that's what value investing is about. It's about finding something which is worth more than the price you're being asked to pay for it. That's an anomaly.
Yeah.
So things like CBA, Combank, it is overvalued, but it's still held in every index fund because it's the biggest stock in the share market. So holding passive funds in overvalued markets is a mug's game long term. And eventually, when the market works that out and trades that away, it's probably going to be a buying opportunity for value investors for stocks like CBA when the pendulum swings the other way.
Yeah.
And also too, like those ETFs, I think I talked about this a little while ago, but index ETFs tend not to hold the small caps. They sample the small caps. So the way that the ETF works is that it has some big partners who are always comparing the price of the ETF to the underlying stocks in the index and trading away the arbitrages. So if the underlying stocks are cheaper than the index ETF, then they buy the underlying stocks and sell the ETF and vice versa. And that's what keeps the ETF hugging the index. But a small cap is a really small driver of that kind of arbitrage. So they just don't get traded by passive funds. Even though you think you're buying the index, you're really buying the top stocks in the index. And that means that for small caps, and I don't know what size it kind of, what's the cutoff, but there's still huge opportunities in the bottom end of the index, maybe even the bottom half of the index, to be able to find things which are undervalued, that aren't being moved by index funds. And most of the capital in Australia is largely in superannuation funds these days, and they're not interested in small caps either. They've got ADT problems. So there's still a very open playing field for value investing, at least at the lower end of the market in terms of market cap. But the bigger argument, as Buffett says, there'll always be behavioural anomalies, and that's what creates the arbitrage for us as well. Things like the greater fool theory will always be there. So to be able to buy when others are selling is a huge advantage to someone with a value investing system or a value investing mindset who doesn't get swept away in the emotions of the market. So, and I also think too that as passive investing, as LLMs or quant investing becomes even more prevalent, they're going to be gained by the owners of by the managers of the companies, because they've got big incentives to keep their share prices going up. So I don't know how they will game those systems, but they'll work it out, and they will. So again, anomalies will happen in the system, and it's like you don't hear the Matt Coman, the CEO of Combank, saying, "Oh, don't buy our shares; they're overpriced." So in some ways, he's kind of gaming the system by being quiet about it and allowing his shares to be bought when they're massively overvalued. CBA is the most expensive bank in the world, but it's a sleepy building society, essentially, in terms of the rest of the banks in the world. And eventually it'll be sold off on that basis, and there'll be a chance for value investors to buy.
An anomaly in the system. That's what Neo was in the Matrix. He was in an anomaly in the system. But I think it's mindset. I think you nailed it. Like, the technology is a secondary thing. It comes down to the mindset. Like, my favorite quote that I've used in all of my, I think, Light updates for the last 6 months is from Lynch. Everyone's a long-term investor until the market collapses, or something like that. Until the market goes down. Like, and we saw that with our members during the 22, 23 tariff interest rate rises and all of the things that happened there, the trade wars and all that kind of stuff, the Ukraine war. When the market collapsed, people just evacuated. They give in. They're like, "Oh, no, I can't stomach this." I'm like, well, it's not going to last forever, right? It goes down and comes back up. But, some people just aren't cut out for holding on for the long term, following the rules, regardless of what the underlying technology is, right?
That's right. That's exactly the point. Just makes the technology is a tool. It lets you do it faster. and quicker and across, more stocks, but it doesn't change the approach really.
Yeah. Until the AI takes over your portfolio and goes, no, I'm not going to let you sell. That would be stupid. Sorry. I'm sorry, Dave. I'm afraid I can't do that.
Yeah,
All right.
you haven't bought enough. You haven't bought enough atomic energy electricity plants for my my what do you call them? Data farm, for my
Yeah.
server farm. Yeah.
Yeah. What you got on your list of talking points, TK? I got 20 stories here, so I'll let you take one before I go through
Oh,
mine.
okay, thanks. I got a few. So if anyone listened to our show last week, which was an AI generated discussion about the QAV Bible, it did mention an outdated figure. So I just want to clear the air that back when we started QAV, my CAGR was 19.5%, but it's not that today. It's come down. It's less than that. I went and had a look at the market over the same time period, and that's also gone down. So I'm still double market, but not 19.5%. So I wanted to just clarify that, and I think that's fair. I think the market's always going to go up and down, and over the long term, the averages will rise and fall. And I think because we're investing in the share market, I'm kind of tied to the share market. So saying something like we hope to achieve double market is a much more realistic goal than putting a number out there and saying you'll get 19.5% or whatever the number is. There's been periods when I've had more than that. This is a period where I'm having less. As you said before, we've come through 2 or 3 years of rising interest rates. They've just been cut recently, but and lots of tumult in world markets because of what's going on in Ukraine, Russia, and the US. So yeah, I'm not getting 19.5%. I just wanted to clarify that.
And we've changed it to double market everywhere else in our material,
Yeah,
but I did miss one of the lines in the Bible, so I
no,
apologise for
that's fine.
that
I
if I misled anyone.
don't hold that against you. I just wanted to clarify it. In terms of stock news, I had a look at the latest buy list, and Grange Resources is back on after I did a download today to prep for the show, and GRR is the code. And I remember doing a pulled pork on Grange back in February, and I can't recall if we red flagged it. We may have, but I was really surprised to see the stock being bid up at the moment following its latest results, which, by the way, in its latest results, the profit was down 48%, half on
Whoa.
half. Yeah, and back in February, the driving, um, well, the biggest risk that they face was, and I'll quote from, um, uh, can't recall where this came from, possibly from the AFR, possibly from a Tasmanian newspaper. But it says one of Tasmania's biggest employers has warned that its 1.3 billion plan to expand the Savage River mine south is unviable at forecast iron ore prices. So the mine that operates, I'll go back a step. Grange Resources is an iron ore miner, and its selling point is that it mines iron ore pellets, which are I guess, concentrated iron ore, I guess if I can summarise it that way, which makes it easier to transport, which they need because they're further away from the markets than the WA miners are, but also of greater purity. So that's its big advantage. However, the mine that they operate from in Tasmania is getting close to finalisation. So again, the article says the mine's output will begin falling in 2027 and it is expected not to produce anything by about 2029. If the site, which produces the high-grade iron ore concentrate shipped from a jetty near Burnie, does not progress with the proposed underground expansion. And they came out and said they weren't going to, and the share price went down a lot. And I did a pulled pork on it and said, look, we probably shouldn't be investing in this if it's got a mine life of at the most 4 years. It's going to eventually wind up. There was a couple of saving graces. I think from memory they were looking at starting a mine in WA, and as at the stage of the pulled pork in February, they hadn't decided whether they were going to go ahead with it, and they were still crunching numbers on the expansion to the mine in Tasmania. It looks like what's happened is they've come out and said that they're now seriously considering turning the mine, which is an open cut mine in Tasmania, into an underground operation. And that will help the business because it'll be cheaper to run than an open cut mine. And the reason for that is because it's, what was it called now? Block cave is the process they're going to use. A bit like blockchain, but in a cave. And the idea is that instead of blasting to get at the iron ore, they drill a bit and let the mine collapse a bit, and that helps to separate the iron ore from the whatever's around it, the dirt, I guess. And that improves the efficiencies of mining for the iron ore. However, that requires something like nearly $1 billion of financing to make that change. So the company's announced that they are trying to secure that financing, and that's their plan. And that's where it's at. So despite having really poor results, I think the market's saying, well, maybe they will go on mining from this mine. So I think it's all very risky and up in the air. And if I'm just kind of calling this out for people to be fully aware, if they do see Grange on the buy list, to do your own research, and maybe by the time someone decides to buy it, there's more clarity as to what's happening in the mine's future. But at this stage, it's slated to close in 4 years. It's awaiting finance to convert from an open cut to an underground mine. It's using this block cave process I've never heard about before, so maybe it's pioneering technology. And the articles also said they were going to make a number of their staff redundant because they need less people on the pit, on the underground mine compared to the open pit. So there could be industrial problems. So there's all sorts of issues this company has to get through before I'd be bullish on the stock. So just bear that in mind if you see it on the buy list.
Well, I just want to point out that when you did the pulled pork, that was in our episode 806, came out on February 12th, 2005, the title of which was The Riley Indicator, when I suggested that a lack of sell signals could indicate an impending market correction. You snickered at me at the time. I want to point out that the All Odds on the 12th of February was at 8804. It then slid all the way down to 7561 on the 9th of April before recovering. So I think the Riley Indicator has been proven now by...
We'll trade it from now on.
Unfortunately, I stopped tracking the number of sell signals at some point after that, so I don't have any data. I could probably do it. But yeah, I remember thinking at the time, there was not a lot of things turning up in my new sells list, and that was probably a sign that things were a bit frothy. Probably not an original insight, I confess, but there you go.
I don't think anything I do is original, so...
Yeah, good point. Maine forecast, Tony. Inside Maine farmers suitors battle to sink Project Crocodile. I saw this on the Financial Review this week. US healthcare giant Cosette alleges Maine should have known it could not meet earnings forecasts when it signed the $671 million deal in February. So basically, the lowdown here, we talk a lot about disclosure and our complaints about the lack thereof. It looks like we're not the only one who's upset about or making allegations about lack of disclosure. This US private equity-based company had agreed to buy Maine Pharma, an Adelaide-based manufacturer of women's health and dermatology products, for $671 million in a deal codenamed Project Crocodile. During the due diligence process, Cosette's army of lawyers and advisors waded through 2,000 documents downloaded into an AI-powered virtual data room set up 4 months earlier. Bottom line is that Maine handed Cosette an earnings forecast based on 6 months of actual earnings and another 6 months of forecast for the 2025 fiscal year. It projected earnings before interest, taxes, depreciation, amortization of $69.9 million. Cosette is trying to terminate the deal because it says there was a material adverse change in conditions. Apparently, Main uploaded a document into the data room entitled CFO Report February FY25, which was grim reading, according to the Financial Review. And things weren't going as well as they said they were going to go. And so this company's upset about it. I don't think Main is something that we hold or own or have talked about, but I just
No.
thought it was an interesting story that forecasts, even at that level of deal, forecasts and projections and transparency. Apparently, these guys have some concerns, not concerns, concerns over alleged misrepresentation of the financials. I thought, oh, yeah, we're not the only ones who feel
Yeah.
upset about that.
Yeah. Yeah, I mean, it's a deal too, so who knows what the motivations were to make projections, probably to get the sale done, I guess.
Yeah. What else you got?
What else have I got? Well, Range weren't the only ones with bad results. There's a couple of other stocks that are on our buy list, which people won't be buying because the sentiment's bad. But KAR, Karoon Energy, came out with a NPAT number which was down 61% on last year's, and the CEO has exited. Looks like the CEO, a guy called Julian Fowles, is leaving because the company's going to relocate its headquarters into Houston, and he didn't want to move there. But they don't have anyone yet to replace him, and he's staying on till the end of the year to run things till that happens. But yeah, they're in a lot of pain at the moment, Karoon. I did a pulled pork on them. They are operating fields and exploring for oil and gas in the waters off Brazil, and they've had a very up and down sort of period with that, and they're also being pushed around by the commodity prices too. So, not a great result for them. The other one was Myer, and I won't go into it in too much detail because it was splashed across the front page of almost every paper. But Myer's down dramatically from its highs. I think it got to about $1.20, and now it's down around 30 or 40 cents. So it's a big fall from grace. The headline, or the article read in the first paragraph: Myer's botched rollout of its national distribution centre will cost $32 million more to fix and will not be ready for the peak Christmas trading period, which caused a heavy sell-off in the company's shares after it reported a disappointing annual result. The department store group, led by Executive Chairwoman Olivia Worth, reported that net profit slumped 30% to $36.8 million for the year to July 26th. The problems with its new distribution centre, as well as poor sales from its apparel brands portfolio, which it acquired from billionaire Solomon Lew in January, weighed on earnings. So I remember at the time we had lots of questions when Myer proposed to combine with a lot of the brands from Solomon Lew's portfolio, the apparel brands portfolio, and then integrate those into stores. And people were asking, is it a good deal or a bad deal? Well, as it turns out, not that great at this stage anyway.
I'll tell you who isn't also good deal. Santos. AFR's reporting massive $36.4 billion Santos takeover deal collapses as ADNOC walks away. Abu Dhabi National Oil Company has walked away from its $36 billion takeover for Santos, becoming the third bidder to abandon a proposed acquisition for the country's second biggest oil and gas producer. In a shock statement, just 2 days before the deadline for a binding deal to be signed, XRG said it had withdrawn its indicative bid and would not proceed to a binding offer. So I had a note in our buy list on Santos that it was under a takeover.
Yep.
But that's now collapsed.
You can remove that note.
I can. Well, I'm updating the note to say the takeover collapsed. So, are they on the buy list, STO? I know they have been on and off it. They're not on it at the moment. But the fact that it collapsed, I mean, is that a good sign or a bad sign for us investors?
Good question, isn't it? And if you don't know unless XRG comes out and say that it says why it collapsed, but and look, it may have collapsed because they had to they had to get Foreign Investment Review Board approval, and I think also to the approval of the South Australian government and perhaps even the Treasurer. So they may have started that process and worked out it wasn't going to happen, for example. So there could be a number of reasons why it collapsed, or it could be that they didn't like what they saw when they got to the bottom of their due diligence. So it's not a good look when a takeover doesn't proceed. And, yeah, I mean, we'll let our numbers tell us whether in the future it's worth buying or not. But Santos has had a history of merging and getting bids, but they're not going ahead. So it's yeah, it's a hard one, isn't it? It's there's something about it that when people have a close look at it, they don't like, and that's a little bit worrying, I think.
Hmm.
Could just be price. That's always an issue. And it could
Yeah.
be that they can't get the approvals that they need if they're an overseas buyer. But
Right.
yeah, you just don't know.
All right. Well, I'll take my note off and we'll keep an eye on it. What's next?
What else have I got? So the RBA's meeting today,
Oh,
largely expected to keep rates on hold.
isn't it the first Tuesday of the month that they meet? It's
No,
the
I think
last
I think
Tuesday of the month.
no, it used to be, but they've changed it now. They're not meeting monthly. Um, so yeah, not sure. Oh, maybe I'm wrong. I thought it was this week.
Hmm.
Thought it was today. Could be wrong. Could be next week. Um,
Okay.
you googling it? Can you find out? I thought it was
Yeah.
today.
Um, yeah, no, it's right. You're right. Stephen Miller, former advisor to Paul Keating, not that Trump's Stephen Miller, different Stephen Miller, says it meets Monday and Tuesday this week.
Right.
Hmm.
Yeah. So, but I don't think they're going to cut rates. I think they'll be on hold. There was some information out last week on CPI, but I think from memory it was maybe a monthly indicator, and they like to wait for the quarterly. There was some depression in the jobs numbers, so uh, the consensus that I'm reading anyway is that they won't drop rates. They'll stay on hold. So we'll see.
Didn't you get this completely wrong last time?
Yeah, yeah, yeah. Well, I'd like to see them cut. I don't think the economy's going anywhere fast, so I think we
Right.
do need to cut, but I don't think they will. But we'll see.
Dave from Newey emailed me after our last show when we were talking about my buyback script. He said, I think you have to check for buyback notifications, otherwise, you might include stocks that have undertaken a share consolidation.
That's a really good pickup, Dave. I think he's right. I don't think it'll be an onerous task because he only had three on the list with buybacks or with share consolidations or with reductions in shares more than 5%. So it wouldn't be hard to do a quick search on those three stocks to see if they did undertake a buyback, which they have to announce.
Yeah,
Otherwise, it'd be a consolidation. So I think Dave's right. Good pickup. Thanks, Dave.
right. Thank you, Dave. What's next?
So saw an article in Livewire about some work Macquarie Bank researchers had done, and the headline is Buffett's rule reversed? And the Buffett rule they're talking about was a quote that is Warren's widely known for, made in 1989. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Um, and that's kind of the essence of QAV, is getting a quality company at a wonderful price. And there's it's my experience that the more malleable of those two things is the quality score. That if we can buy something that's a bit lower on quality at a fair price, we still do it. And I think that this research from Macquarie has also found that too. So Macquarie Global Quant Team back tested 30 years across 10 global markets and found that fair companies at cheap prices often outperformed wonderful companies bought at fair valuations. Um, so that's kind of what I think too. They did identify some Australian stocks that they thought were um, not great. So how am I trying to say this? What's the wording they've used? They've got a very awkward way of talking about this. I guess to try and not to offend the companies. They call them fundamentally cheap stocks, businesses with fair to solid fundamentals that are offered at a cheap price, is what they're saying. And their list includes some of ours, like what's this? We've had Horizon in the past, it's on their list. We've had New Hope, it's on their list. We've had Sky Network Television. Tower Insurance, I think, it might still be on our buy list. Yancoal was. Credit Corp has been on the buy list. So a fairly similar sort of overlap to what we've seen and a fairly similar result. And it's hard to go up against the great man, Warren Buffett, and say he's wrong, but I've always thought that he changed courses midstream when he went from being a deep value cigar butt investor to being more of a quality investor, and his returns are always better in the first half of his career than the second half of the career, and I think that's because he got away from deep value, which he probably had to. Quality companies are often high market cap companies, and he had to, as his funds got bigger, go after high quality companies. But anyway, bit of
Yeah.
research which backs up my findings as well.
Different challenge when you've got hundreds of billions that you need to invest
Yeah.
versus millions.
Yeah.
Right?
Yeah.
I want to do a shout out to Brendan. I got an email from Brendan over the last week. He's been a Light member since 2022, which deserves a round of applause in and of itself.
Thanks, Brendan.
Because,
Well done.
well, because that was a rough couple of years,
Yeah.
and to stick it out during those couple of years takes some stones. He said, I said, how's your portfolio doing? He just upgraded from Light to Club. And he said, my portfolio was slowly tracking upwards through 23 and 24. But this year, since March, it's screaming ahead, currently showing a 61.48% return. I use QAV Light for the majority of my investing. However, I also DCA into the S&P 500 and hold a few Mag 7 stocks which I owned before signing up to QAV. But he then said the majority of my return has come from QAV Light stocks, which make up roughly 65%. So well done, Brendan. Great to hear.
Yeah.
I don't hear much from the QAV Light members about how their portfolios are doing, despite me asking from time to time. But I appreciate Brendan sharing that. Hope you don't mind me sharing it on the show, Brendan, but well done. And good on you for sticking out the rough years. That was a rough time to start 2022. It was the dark years when the ring was in the hands of the wrong people. Okay,
We're
what's
still trying to
next?
get it back.
No, we're definitely back, baby. We're back.
Oh, we are, yeah, but the ring is still being held by some of the dark forces in the world.
Oh, right.
What else have I got? I've got no, actually that's all my news. I've got a pulled pork to do on MLG. MLG Oz is the company. So when you're ready.
Well, I got a new news script version of my news script running in the last week, so I got a bunch of news stories with QAV related stocks. I'll just run through them quickly. Perseus Mining receives presidential decree for underground project at Yaour mine. They received a presidential decree for this project, which is a significant milestone for the company. Significant investment of 170 million expected for the project. First ore production targeted for January 2026. This is in get away cookie thing. The Côte d'Ivoire. Côte d'Ivoire is where the Yaour gold mine is. It's always good when you get the presidential decree. I thought it was Donald Trump, one of his decrees at first. I thought they'd got a decree from him. He likes throwing those around. But
The share price reacted well to that.
Did it? I haven't checked for a couple of days. PRU?
One of my, first of all, I should say I hold it, but one of my better performing stocks.
Yeah. Oh yeah, look at that. Jumped from 465 up to 496. Came down a bit, but today, but yeah. It's been a great stock in all of my portfolios. I think I hold it in a bunch of different portfolios. But it's been a real winner, hasn't it, over the last couple of years? Let me see. PRU up yeah. In my super portfolio, I've had it since April 24. It's up 111%. Added to a couple of light portfolios. May 24, it's up 100%. March 2005, I added it to a couple of portfolios. Light portfolios up 60% since then. So yes, it's been a corker.
Maybe we shouldn't complain about the where the ring's being held at the moment in the dark forces because it means
Could be
the
in the
gold
Cote
price keeps
d'Ivoire.
going up.
Yeah. Woodside breaks ground on a $17.5 billion Louisiana LNG mega project, supposed to enhance their position as a global LNG leader. Construction on the first LNG train is over 22% complete. Long-term capacity projected at 16.5 NPTA with potential expansion. Sale of 40% stake to Stone Peak investment firm. What's Woodside's code these days?
WDS.
WDS.
Yes.
There it is. Yeah. I put them out as a possible in the light portfolio in June. They're only up 2% since then, but hopefully that's going to give them a bit of a bump. Australia approves extension for Woodside-operated NWS project, Northwest Shelf project. Another Woodside news. They've received environmental approval from the Australian government with strict conditions to manage emissions. This is for... this requires reduction of emissions by up to 60% by 2030 and net zero by 2050. There you go. So they hold a 33% interest in the NWS and related projects. ASX growth stocks with higher insider ownership. Discuss Duratec, another great QAV stock. Duratec's insider ownership. Thought this was interesting because, we like skin in the game. This was in Yahoo Finance. The Australian market showed signs of resilience as the index rebounded, taking cues from Wall Street's recent highs, blah-de-blah-de-blah. Goes on to talk about a bunch of companies with high insider ownership. Some are familiar, like Findy, 33.6%. Great QAV stock. But a bunch of others that I haven't heard of. Wizr, WZR. The name of the company is WISR Wiser. Don't know what they do. Pointera, Newfield Resources, Hyperion X, Image Resources. Haven't seen them on the buy list for a long time, but they were a mainstay many years ago. Findy, Echo IQ, Adveritas, and Crooks. Says Duratec, inside ownership 29.4%. And I know that's, as I said, that's been a great QAV stock over the years. Let me see. Up 316% in one of the light portfolios since I added it in November 2022. Added it again in June of 23. It's up 196%. February 23 to the dummy portfolio, it's up 192% since then. A couple of possibles I added it to. It's up 140%, 100%. Anyway. So there you go, insider ownership.
All I can say, Cam, is that the rumours of the death of value investing are greatly exaggerated.
Yeah, right? 300% a couple of years. Some news from Clover. I think they're CLV. I hold them in a light portfolio. Clover's full year 2025 earnings report highlighting significant revenue and net income growth surpassing analyst expectations. Revenue increased by 38% year over year to 86 million. Net income surged 363% year over year to 7 million. Profit margin rose 8.2% rose to 8.2% from 2.4% in FY 2024. So let me see how is CLV doing. Added them back in June to a light portfolio. They're up 37% since June. Not bad. Whitehaven Coal announced updates on their market buyback progress. Thought this was interesting with our recent addition of point scoring for buybacks. They've announced an update regarding its ongoing on-market buyback of ordinary fully paid securities. As of September 29th, 2025, the company has repurchased a total of 5,794,792 securities. They're a Josephine. They're on our buy list this week, but Coal is a Josephine. So just letting people know that.
Yep.
And the last thing I've got is from Mark. He sent me an email. Hi, Cam. I subscribed to the Wall Street Journal on some bargain sale recently, and I'm quite enjoying it. An article popped up today. Jonathan Clements, longtime WSJ columnist, dies at 62. Turns out he wrote the Wall Street Journal personal finance column Getting Going from 1994 to 2008. Seemed interesting, so I kept digging and found this column from December 31st, 2000. Following these 25 basic principles of investment will help you save. I'm going to run through them very quickly. 1. Time and a healthy savings rate will salve most investment wounds. 2. Your two top financial priorities should be maxing out your 401k plan every year and paying off your credit card balance each month. If you do those two things and nothing more, you'll be in better shape than the vast majority of Americans. 3. Your employer's stock is the riskiest stock you can own. After all, you already rely on your employer for a paycheck and possibly your health and life insurance as well. Why crank up the risk level even more by betting your portfolio's future on the same company? 4. If you invest in just a couple of stocks...
Yeah, except that we do like to see skin in the game, as you said before. So, and it's the one investment, if you do work at a company where you have shares in it, it's the one investment you can have a hands-on control over, in a small way perhaps, but still.
And in Australia, they probably don't pay for your health or your life insurance, but
yeah.
I'm actually in the US show today. I'm doing a healthcare company, a hospital company that owns a bunch of hospitals, and looking at the for-profit business model of the US healthcare. And my takeaway from it is, I'm glad I don't have to be a patient in the US. That's, the healthcare costs are insane, as we all know. 4, if you invest in just a couple of stocks, the odds suggest you will lag behind the market average. How come? In any year, the market's return is driven by a minority of stocks that post blowout gains. Unless you diversify broadly, you probably won't own any of the big winners. Thoughts on that, Tony?
I think it's probably true. I hold a fairly concentrated portfolio, but it's still, I think, got 6 or 8 stocks in it. And we recommend 15 to 20 for people. So, yeah, we've seen it time and time again that our portfolios are driven by 1 or 2 stocks. And if you don't hold them, you don't get the performance.
I wouldn't say 15 to 20 is diversify broadly, though.
Yeah, I don't know what he means.
It's pretty concentrated. Yeah.
Yeah. It's enough, I think. Other research has shown that that's a good size for a retail investor to hold.
Yeah. I'll skip some of these. The couple that stood out for me. Over the long haul, a mediocre stock fund will outperform a brilliant bond or money fund manager.
Yeah, well, that's just stocks always outperform bonds and cash. That's kind of self-evident, really.
To avoid a big financial hit, steer clear of the derivatives market. Don't bet heavily on any single stock. Keep margin debt to a minimum and try your darndest not to get divorced.
It sounds like something Warren Buffett would say. Yeah, I agree wholeheartedly. I mean, Warren Buffett has said people were always pitching to him to take out margin loans to boost his holding in Berkshire Hathaway, and he has said if he had taken out margin loans on Berkshire Hathaway, he would have been bankrupted twice over his lifetime.
Yeah. Let's see. I'll pick one more here. When in doubt, do nothing. Yeah. It's almost always the cheapest course of action.
So true, isn't it? I mean, especially for people who've had careers in business, you kind of hardwired to always be doing something, aren't you? Something happens and your boss says, get onto it, fix it. It's just so you sort of get into that hamster wheel. But investing's kind of the reverse. It's patience. It's operating with incomplete information sometimes. It's using probabilities. Yeah. So doing nothing is often the right call. But it's hard to do because you're hardwired to, I've got to make a change. I've got to do something to be seen to be doing something, and it's wrong in terms of
Yeah.
investing anyway.
Well, and actually, I will pull one more. I will pull one more out of here. A tumbling stock market may be upsetting, but it doesn't have any financial impact unless you have to sell. If you have the money to buy, the sell-off becomes an opportunity. It's an old Buffettism, isn't it? Buy when
Yeah.
there's blood in the streets.
hmm
So thank you, Mark, for sending that. Good stuff. Some good wisdom in there. Time for a pulled pork, Tony. MLG.
MLG, and talking about skin in the game, this is a stock which is owned 51% by its founder. So
Wow.
the company's full name is MLG Oz. Code is MLG. It's new on the buy list this week. Only a small stock in terms of ADT, probably because the founder owns half the stock, so he's not trading it. ADT is $71,000, so it won't suit big portfolios. But I thought I'd do it because it's interesting and it's been doing well lately. Who are they? I hadn't heard of them. They're a Kalgoorlie-based mining services contractor with operations in WA and NT. They claim cradle to grave services from planning to construction to operation of mine sites. And that involves providing engineering services for the planning and construction stages of a mine site, providing haulage of the ore, crushing of the ore, providing aggregate, so like cement, etc., to be able to build the mine site, construction services to build the mine site, blasting and drilling used to operate the mine site, contract management services, JV services, and then rehabilitation services once the mine is shut down. So they are in every stage of the mining life cycle. I think it's fair to say, though, their background is in haulage of ore and aggregate, and that's still possibly the biggest part of their business. They own and operate 1,470 heavy equipment vehicles across 38 sites. So even though they've been going for 23 odd years and started with one truck, they've certainly grown a lot over that time. I think the interesting thing at the moment is they operate across most mining sectors, and they've recently completed work for Fortescue Metals and for a lithium mine. However, something like 94% of revenue comes from the gold sector, and they're based in Kalgoorlie, so very much heavily into the gold sector. And as we just spoke about before, the gold price is hitting record levels, so there's a big tailwind for gold miners at the moment. And the age-old adage comes to mind: when there's a gold boom, invest in the company selling the picks and shovels. And this company is certainly one of those. They're selling services to a gold boom. They do other things. One of their specialties is off-road haulage, so they get into mines that aren't serviced by tarred roads. So it's got to be an advantage for them, and I guess a barrier to entry for their business. They were founded in 2002 by their managing director, Murray Lee. And I guess astute listeners will work out that MLG stands for Murray Lee Gold, MLG. Started by Murray Lee. He initially was a truck driver hauling silica for BHP. Eventually got a fleet of trucks listed on the ASX and is now expanded dramatically. Results were good for the annual numbers. Revenue was up 13.8%. NPAT was up 10%. Gearing was down 37%. And they point out that their revenue has grown at the rate of 32% since 2018 per annum. So it's certainly expanding quickly. In terms of QAV numbers, the price for the analysis was 90.5 cents per share, which is 10% below consensus target, above IV1 of 36 cents, but below IV2 of $1.21. Net equity per share is 98 cents, so it's below book value for this company, and obviously book plus 30. Isn't paying a dividend, so we can't score it for that. Stock Doctor financial health and trend is strong and steady. Stockopedia gives it an 81 for quality in its ranking system. F score is 5 out of 9, which is acceptable. The overall stock rank in Stockopedia is 99, so they like this company as well. PE is just under 13 times, which is not the highest or the lowest in the last 3 years. The real big heavy lifting KPI for us is PropCAF. So price to operating cash flow is only 2.3 times. So throwing off lots of cash, which is why they're paying off debt as well. Earnings per share growth is forecast at 71%. So it's growing. Growth over PE is 5.5, so it's way above our cutoff or our hurdle of 1.5. So that gets a 2 in our checklist. As I said before, the founder, Murray Lee, L-E-A-H-Y, Lee or Lay, holds 51% of the stock. So he controls the company, basically, and which means there's not as much stock as we'd like to see in the float every day, but certainly he's doing a good job. It's a new 3-point trend line upturn. So we give it a score for that. It doesn't have continuing increasing equity, and it just missed by a little bit, 1/2 a couple of years ago. So that'll roll around to being continuous equity, I would think, but we don't score it for that yet. Overall, quality score is 88%, 15 out of a possible 17, and the QAV score is 0.38, which makes it in our top 10 on the buy list. Risks, opportunities. Opportunities is obvious. If the gold price keeps increasing, they'll do well. The risk is the flip side. If the gold price turns down, then the work will dry up. And that's okay. The real risk is that they get stranded with equipment. And they point out all of their equipment's on a lease basis, or most of it's on a lease basis of up to 7 years. So there'll be some equipment which they might get caught with in a downturn if they can't offload it. So that's a risk. The other risk, which I thought was interesting, was the owner, Murray Lee, pointed out that they operate in Kalgoorlie, and Kalgoorlie faces an accommodation problem at the moment. So finding accommodation for their staff is tough, but I'm sure they'll find a way. So that's MLG, something new to me. Owner founder, which is good, growing like Topsy, but still being able to be bought at a little over twice times operating cash flow, which is, again, another sign that value investing isn't dead.
They were in our buy list, I remember last year, but they had a qualified audit. We had to take them off, and then that got removed, and we put them back on again.
Right.
And they're clean now. But yeah, I've seen them on and off over the last couple of years. Interesting. I would say one of the risks of Kalgoorlie is climate change and how hot it's going to be in Kalgoorlie over the next couple of years. Didn't you do a pulled pork recently on a company that specializes in building accommodation in places like Kalgoorlie? They like to fly in, fly out accommodation.
Possibly. It's not ringing a bell, but yeah, I know there was a couple on the buy list many years ago, but I can't recall which one it is.
I think he did one like in the last couple of months. I can't remember who it was now.
Okay.
All right. Thank you, TK. After hours, apart from playing golf, what have you got? How are the horses going?
Good. So Lake Forest ran third on Sunday, and double market runs tomorrow at Sandown, race 6. So the trainer reckons it's a bit of a hit out and she'll want further to go, but he says don't be surprised if she runs a place. So double market's back. Ryder Cup was, I guess, the big watching for me on the weekend. Are you familiar with the Ryder Cup, Cam, in golf?
No, I've heard of it, but what is it?
Caught any of the controversy over this latest edition?
No.
Okay, so it was going on for 3 days. It's the Europe versus the US in Bethpage Park, which is a state forest on the outskirts of New York in Long Island. President Trump turned up to wish the US team well. They lost, of course, which is actually unusual. The home team almost always wins the Ryder Cup.
Right.
So it was a kind of climbing the mountain for the Europeans to get up. They were warned that the New York crowd would be rowdy and wouldn't like them, and they didn't disappoint. The the stuff. You go and Google it. It's quite
You get
interesting.
rowdy
So,
crowds at golf tournaments. I thought golf
well, you don't
tournament
normally.
crowds were,
This was
yeah, it
this
was all
was
like golf clap.
exceptional.
Wow.
Usually, they
New
had to.
Yorkers, huh?
At one stage, they had to call in 20 state troopers to stand beside Rory McIlroy, the number one European golfer, to keep the crowd away. Um,
Wow.
someone threw a beer at his wife, who had to leave the course in tears. Um,
Oh my God.
they were saying all kinds of mean things. One of the European players, Tommy Fleetwood, has a wife who's about 23 odd years older than him, and they were continuously saying, "My grandma's younger than your wife," and things like this, and calling some of the players fatso, and yeah, just yelling on their backswing, all sorts of things.
It was a MAGA
So
crowd.
yeah, pretty much. Well, New York crowd, I think, New York NFL type crowd, really, but just went over the line, crossed the line. Uh,
Wow.
So yeah, so like you don't see golf make the front pages sometimes, but it was widely reported, all these incidents and different things that were going on. People being ejected. One of the European players had to be held back by his caddy from jumping into the crowd to punch someone out. It was
It
just
was like Happy
crazy.
Gilmore. Was
Happy
it
Gilmore,
You
yes,
sure
it
they weren't
was.
filming
It
Happy
was,
Gilmore? Where's Happy Gilmore 3?
it was the
I
real
still
Happy
haven't.
Gilmore.
I
Yeah.
still haven't watched Happy Gilmore 2. I got like 5 minutes into it and got interrupted and haven't got back to it.
Yeah, good fun. Yeah, so that
The
was my TV viewing recently.
the only sporting thing I saw was Snoop Dogg's performance at the AFL Grand Final. I caught that on YouTube.
You a fan?
Heavily. Well, I'm a fan of Snoop Dogg, but this was mimed, um, bleeped. Well, no, he was. It was sanitized, which is crazy. Like he's talking about, it was all my hitters down, like singing songs down with my N word, but it's like he's doing the songs, but instead of using the N word, it's down with my hitters. Shout out to all the mother hitters in the audience. It was like ridiculous. Like,
It
why are
was.
you getting him to do these hits and then making him like edit the lyrics? And it was like,
Why would he?
instead of smoke weed every day, he would just like not say the weed word. And it was like, I don't get the impetus to get Snoop Dogg, but then, well, you can't actually sing the songs. We have to clean it up for the audience, kind of thing.
Well, I couldn't see why
Anyway,
they got Snoop Dogg, I must admit. I mean,
yeah,
they paid $2 million for that 10-minute performance.
right.
Luckily, there were a couple of Australian acts that joined him, which hopefully they got a
Yeah, I
fair
saw that
share of that, but they
Jessica
probably didn't.
Malboy and whatever did like
Yeah,
a thing,
Baker
but
Boy.
why
Yeah,
couldn't they just get an Australian act?
exactly.
Why have Snoop Dogg at
Pay
an
pay
Australian
them
football?
pay them $2 million. Yeah,
Yeah, crazy.
I agree wholeheartedly. I thought it was wrong, but and I couldn't tell what the lyrics were. I don't know any Snoop Dogg songs. Not a fan. Not that I have
What?
anything against him. He's fine, but yeah, not a fan.
Uh,
So I just
you
thought it
don't
was
like your hip
strange.
hop. Yeah. Um, the one thing I did want to recommend, if you haven't seen it, is the David Chase slash Sopranos documentary. Have you seen it?
I have, yeah. It came out six
All
months
right.
ago, I think. A while ago,
Right.
yeah.
I caught it on Max or wherever over the last couple of weeks. Really enjoyed it. It was much
Oh,
more
good, yeah.
entertaining than I even expected it to be. He's an interesting character, and it was just good to hear more of the
Very.
stories. And but I was, the whole thing about just reminding me of Gandolfini and how young he died. Like he was relatively unknown before he did The Sopranos. Then he was one of the biggest actors on the planet, and then a few years after it finished, he died. So literally, his entire career essentially was playing Tony Soprano. It's like, and knocked it out of the gate. Obviously, just an incredible performance. Gave everything, and put on weight and died. So yeah, it's just so tragic, his story in a way, and obviously the toll that it took on him personally, as well as on his health.
Yeah,
Yeah,
it was a good documentary, and the stories about David Chase being advised by his friends to write about his mother. Like he
yeah,
kept he kept
yeah,
catching up with people and they'd say, don't get writer's block, write about your mother.
yeah.
Who
And you
was
and I, you put
Soprano's
me
mother
onto
in
that
it.
book by the Easy Riders guy that was
Peter
about this
Biskin.
era. Yeah. So I'd read a lot of this stuff that was in the book, but it was just good seeing it on TV
Mm.
and seeing David Chase talk about it. So that's pretty much the only thing I can really recommend this week.
There's a lot of new seasons for series that we like, which have come out. So Tulsa King, we watched the first episode of the new series, season 3, on the weekend, and the same with Slow Horses, which we love. They've got the new season out too. But the streamers are dropping them one per week. So and some of them have ads. It's like there's no difference now between streaming and free to air TV, except you're paying for the privilege
Yeah,
these days.
the HBO ads drive me nuts because it's the same bloody ad all the time. It's like SBS, the same ad you see every 10 minutes.
Yeah.
Anyway,
It's a shame. And
yeah.
I guess they do it because you subscribe for longer. Because I guess, like we do sometimes, is we stop subscribing when the season's finished for series that we like, for shows that we like.
Yeah.
So I guess if they drop them one a week for 10 weeks, at least they've got our money for a couple of months.
Yeah. That's probably the rationale. Although, then you just don't subscribe until the season's finished and then
Till the end, yeah.
Yeah. You subscribe, watch it, and
And
dump it.
unfortunately, all your friends have told you what happened and wasn't it great and all that. So
Yeah.
yeah. But anyway, I agree.
Like Chrissy and I, like you're recommending shows, Hunter recommends shows. I reckon Chrissy and I watch one episode of TV a week these days, maybe 2. We just don't have time to watch TV. I'm either working or we're at Kung Fu or whatever. I just don't have time to sit and relax and watch TV anymore. Well, if you don't have anything else, I guess that's it. I want to say happy birthday to Shostakovich. It was his birthday in the last week. The anniversary of my father's death, it was the same day as Shostakovich's birthday. So I like to think they're connected in some way. No, probably not. But anyway, Shostakovich's birthday. So listen to Shostakovich, people, if I haven't got you down that rabbit hole yet. Endless joy I get from Shostakovich.
Oh, that's nice.
It is. And we're going to go talk about the United States market. So thank you, TK. Thank you, everybody. Have a good week.
Yeah, you should be having a good week. The market's doing really well and our shares are doing really well.
Yeah. Easy time to be a value investor right now, despite Albert Speer. Okay.
All right. Thanks, Cam.
See ya.